All right, what is up, YouTube? I am back once again. So today we're definitely going to just jump into the Robinhood portfolio. Also, we're going to talk about possible moves that you should make with your portfolio, or if you just open an account and you want to, get into a stock that you really like and you don't have the money for it. I'm going to go ahead and show you the alternative way to actually be able to buy that stock. So let's go ahead and jump into the portfolio. Okay. Boom. Okay, so you see the last video we just had, the portfolio is around about $2,800, $2,844. So since then, the market has pretty much taken back my gains, and that's basically because of the Take-Two Interactive. We're down to, I think, about 1% on the day, and at some point I think we got close to 2% for the day. So you see, this is pretty much weighing heavily on my portfolio. Now, as you see, my average cost for buying the stock is at $77.47. Now, if we go back, I think my earliest buy was around $70 actually. So basically, what this company is, you see Take-Two Interactive, marketer, publisher, interactive video games. Really, like we keep talking about it before. It's 2K gaming, Grand Theft Auto, online gaming, e-gaming type of sports. You see video games, entertainment, software service. So it's that type of company. Now, if you go back and look at a 5-year chart, you go back and look at a 1-year chart, you'll see that pretty much the return for the stock has pretty much been past over 100%, and it is one of the top leading video game stocks that we have in the market right now. So it beats out EA's return, and it also beats out Activision return. So it's kind of where I hang up, where I kind of want to get into another video game stock, but at the same time, Take-Two is really the one that I really need, just because of I play Grand Theft Auto. I mean, I play Call of Duty sometimes, so I might just get it just because I play Call of Duty, and also I do play Madden, so I might get all three, and then I might have to look into other video game stocks because these are not just the only three, but these are the two. I would say the 2 out of 3 that are mostly widely held. So we go back to the portfolio. Square, we started investing in Square back when it was $25. Apple, we bought Apple back when it was, we go to the share price back when it was just $167. I know we were late to the party, but at the same time, if you go back a couple months ago, back last year, I sold my Apple shares at 121 just before the breakout, just before Trump became president. We saw the breakout happen. So that's pretty much, I had to pretty much come back in and pay $40 higher than I did before. So that's pretty much why I'm not letting it go, and this will be a long-term investment for me. And like I said, we had to Take-Two Interactive, Berkshire Hathaway, Warren Buffett's company. This is pretty much the baby class or the baby shares of the A-class shares. Now, when you get into this investment, this is pretty much, getting into the S&P 500. It does the same return, or it mocks and mimics the S&P 500's return. You get a very diverse portfolio once you start to dibble and dab and start to buy Berkshire Hathaway B-class shares. Now, this is one that you really want to hold on to later on in life, because I think back in the 80s, the A shares went for $300 to $200, and now today, you fast forward 20, 30 years ahead. Now the shares are worth over $200,000, $300,000. So this is definitely one that you want to keep on to, just because of the way that Warren Buffett has structured the company, so that way the share price will always keep ticking up. Also, we have the XLF. This is, like I said, you can actually get into a lot of companies with not even, having to waste a lot of money. So this is XLF. This is the banking sector. Definitely check out the spider sectors, so that way you can actually see if you can actually get I would say affordable way to actually own sectors and probably own different groups of different companies. Also, this is Chemours Chemical Company. This is Caterpillar, as you know, infrastructure and construction. Definitely, they're starting to get a long-term growth plan, and that's what I like to hear. That's pretty much why I bought the stock, because I heard long-term growth from the CEO, and I'm definitely confident that he'll get the job done. So he's not looking for any, he's not looking for short-term growth. He's looking for that long-term growth. The XLY, consumer discretionary, and I think this is consumer something, whatever it is. But this is Cigna. As you see, Cigna, our buying average for Cigna is right at $176. As you see, it's definitely coming back. So I would say the buyers in Cigna, or the sellers in Cigna, they're still waiting for something to happen. I'm not sure what's going to happen for this stock. But we're just in it for a trade. Looks like it might go to 165 later on. I think we're down about over $30 for the stock. We see our buying or our average cost is $176. We're down over $50 for the stock, and this is pretty much a slow grind down, basically. So you see it open up at 173, and the stock just, it just went on a tear and just kept going down. I'm definitely going to be in this for maybe a couple more weeks to see exactly what it's going to do, because I do know it's a higher share price, and I do know this thing will be back at $200 because the healthcare sector is definitely where, the healthcare giants are definitely where some of the growth is. So if you can get a healthcare giant, you definitely want to check into that and see if you can actually, get a position or probably build a position around there for a good trade. But I guess not a lot of people are liking their acquisition of Express Scripts, or however you say the company. But that's pretty much all the portfolio. Also, the new addition is Roku. This is definitely a long-term play for me. Like I said, I like Roku back when the stock was, at the mid 35s, or I would say the mid 30s. So that's exactly why I started to, maybe build a position around here, right here, $37. And if it goes lower, maybe I'll, add a little bit more money to my Robinhood account so that way I can actually get into, Roku. But these are definitely long-term plays that I'm looking towards. So I'm looking for Roku, Cigna as a trade, but the rest of these stocks are definitely a long-term play, and this definitely keeps my portfolio, from basically making almost $1,000 for a year. So, you definitely want to have some long-term assets, and you also want to have some tradable funds just in case something happens in the market. You want to make sure that you have some money on the sidelines, basically, so that way you can actually trade and play around in the market. Also, if you definitely look, what's the notification here? Okay, so it's definitely our purchase power right here. 37.46 is back when we bought the shares, and we see if we can go to our account right here. We go to the summary, and as you see, our returns. This is all the returns I have right here. Take Two Interactive is pretty much being my highest return, over $200 in that. Square, I'm over $200 in that. Berkshire Hathaway over 40. Same thing with Chemours. Just about Apple, we're about to be over 40. Consumer discretionary, definitely. I bought this, I would say a couple of weeks ago. Same thing with Caterpillar. Same thing with the financial sector. I just bought one share just because I want to stay diversified and I don't want to force any trades. So if I don't want to force anything, I definitely get into something safe, something that I know. So that way I would avoid, forcing a trade or forcing a loss on myself. So, Roku, like I said, we just bought that. And then Cigna is definitely our biggest loss that we're taking right now. So that's definitely, definitely where I keep my eyes on Cigna. If it keeps bleeding, if it keeps bleeding us out, we're definitely going to drop that and see if we can have other opportunities in the market. But if we go to CNBC, and this is definitely where I look up some of the top gainers. But if I don't go on this, I'm definitely looking at it on TDs Ameritrade, Think or Swim. So we can go right here. Let's see if we can find it. So we go to the S&P 500. We see the top gainers, the market movers. So you see Netflix down 3.5%. Netflix is definitely one of those powerhouse stocks. You definitely want to hold on to that. So that's something I'm going to be looking towards long term. I got a chance to actually read that earnings call transcript last year, the last quarter, and it definitely made me excited for 2019. They're going to have a lot more shows and actually, I would say box office type movies coming out on their platform, and it's going to be a Netflix original. So I'm definitely going to be, looking into that name. And every time we get a sell off, I'm definitely going to keep my eyes open for it. But whenever I make a big trade and I have enough money to buy Netflix on one purchase, I'm definitely going to buy it. But we see Netflix is definitely the biggest laggard in the S&P 500. But we see Micron. Micron is definitely one. Micron was one that, I think my professor was talking about how he was going to buy Micron at $30. And I think Micron had like a top right around, I think 35 or 37. But whatever happened, Micron definitely broke out of that range. And ever since then, I think the return percentage on Micron since that day we had that talk, I think it has been over, 100% or maybe close to 100%. As you see, it started off at $20 or close to $20. And the stock has definitely just been keep going up. And I think the stock is going to keep running up all the way up to the earnings call. And if the stock does do horrible on earnings, it might open up an opportunity to actually get into that stock. But you definitely want to understand what's going to make the stock fall and also understand what the company does before you just jump into it. Tesla Motors, that's another one that might be a long-term play for me. just because the what Tesla's doing, it's more of the 5-year, 10-year out mind frame rather than looking at it right now. They have a production problem. They also have a cash flow problem. That's definitely what's kept me out from buying the stock. And I think the stock dipped all the way to 150. Now the stock is all the way past $300, so it's pretty much 100% return. So it's letting me know that people are actually, excited about Tesla's future rather than the short term for Tesla. So let's let me know exactly what's going on with that story there. The Dow Jones, our biggest laggard in Dow Jones is about Caterpillar and Boeing. You see, we actually own shares in Caterpillar, but now Boeing is definitely one, and we have I guess one to offset, kind of a loss. But Apple's definitely another. One of the stocks is definitely popping out today. The IQ 100. If you don't know anything about the IQ 100, these are just 100 of stocks that CNBC experts pick, to be sort of like an index average, basically. And the Kishno. And that's pretty much it. So if there's any other questions that you guys have, or if there's another market move that happens in the market, I'm definitely going to let you guys know. Now, as you see, the portfolio is at $2,800. Now, I would say just because it's at $2,800 does not mean the stock, or does not mean that it can't go to $2,700, $2,600. I'm looking for this thing to go to $3,000, and after it goes to $3,000, I will start to deposit more money in. But I want you guys to be on the growth process with me, so that way you can actually see exactly what's going on. So this is definitely my account, real and live time. You can see it change dollar for dollar. We see the one month return of about 26%, and I think we had a peak right here, 28.30. That was back when the stock was I think our account was up just about over 30% actually, because it was just a little bit higher than that. But this is definitely something that definitely something I've been working on, and something I want to grow, so that way, ultimately, maybe this will be $1 million account, maybe this will be a $100,000 account. So I don't want to limit myself, but I actually want to make the smart moves rather than the more riskier moves that you see people making. But whenever they get options on here, I think that's exactly when my account is going to see a lot more returns, a lot bigger returns, just because of my price target, the incremental moves that I do watch. I'm pretty much accurate on all the price movements for different stocks, just like Adobe. Adobe. I knew Adobe was going to 120 or 220. We got Squares going to 55, Apple going to $200. Take-Two definitely be at $150 by the end of the year. Berkshire Hathaway definitely going to 240. These are just different. These are just different ideas. But if you understand, and if you probably you might want to book a lesson with me, so that way you actually understand how to predict price movement, how to understand if the stock is a buy, how to understand if a stock is a sell. Because pretty much this right here, I've done over 100% of return. This definitely, 100% return. I know it says my buying average was around $70, but I was back in the stock back when it was at $40. But Berkshire Hathaway, somewhat of a high return. Kim Moores is definitely a high return. So I buying this back when it was at $35. But yeah, that's pretty much, how the portfolio is. And I know Roku will probably be a $60 stock, after they got the earnings out of there, because there's just so much growth potential for the Roku and the Roku TVs. But that's all I have for you guys. But like I said, if you have any questions, contact me. Let me know. Put it in a comment. You can check out my Instagram, Mike the Day Trader. Let's see if we can pull it up right now. But yeah, like I said, if you have any questions, just talk to me. Let me understand. If you don't understand something that right here, Mike the Day Trader, just go ahead, pull me up, and we'll definitely just chat about stocks, chat about options if you're interested in that. But like I said, that's all I have for you guys. Basically. So go ahead, take care, and see you later.